Tuesday, January 10th, second week of January of 2023. And it's a real quiet morning this morning. I start out with the stock market indexes, the S&P in particular, as usual. You can see that we have not been very much higher or lower than the previous day's trading range, which is where my cursor is on the 1 minute data chart. So a point or so above, point or so below, and right now it's up 80 cents. Nothing happening. Let's look at the daily chart. I do want to start talking about, as I did yesterday, the possibility of a very large head and shoulder bottom forming in the stock market indexes in a general sense, but it's really a good looking one maybe in the S&P 500. We have the two lows, the lowest low being the first shoulder on June 17th, but that's not necessarily to be ignored on July 14th, about a month later, another interesting low. A lot of the time you have complex shoulders. And by the way, that was at the time the last shoulder low on a head and shoulder bottom of its own, because that was the first shoulder low, the head, the shoulder, the neckline is coming across these highs here. We broke out. We went to our minimum upside objective. I talked about this in great detail almost every day back in the days when that formation was working. It was a real good one. Now, basically the same principles apply in terms of watching for another head and shoulder bottom, because, hey, so far it really actually looks pretty good. Now, I got my rally yesterday that I was expecting up to resistance, which was 392 to 393 area, but 395 and a half, more exactly 396.30 something is the gap closure. So 396 and small change, I think, is a more accurate number to come up with in the next few days. But I don't think the rally, if it occurs, and we already, yesterday's high, hit the resistance. So that was good enough. But there's a chance it could get a little bit stronger. Now, I don't expect it to carry through to the upside any more than that. I do expect it to turn down significantly, maybe this week. This is only Tuesday. I don't think this rally, if there's any more left to it, is going to go anywhere. I am looking for basically this, a turn down very soon. I move down to modest new lows around the end of the month. In fact, in the price range of 367 would be just about perfect, give or take a couple of points higher or lower. And the timing for this, I'm going to be changing. I talked about the beginning of February yesterday in some detail. I'm pushing it forward 1 week. I'm looking at the last few days of January now, January 27th to be exact, which I highly doubt I would end up with exactly that date for a turning point. But it should be close to it. And in fact, I drew a circle in the ballpark price range and time frame. So it actually starts on January 16, but it could be anywhere from that point up to maybe February 8th in that time frame, about 3 weeks. The price range stays the same, 367-ish, give or take a couple of points. So we'll see what happens here. Today, again, we're very, very quiet, up 1 point at the moment. It is 10:02 in California at the moment. And yes, my electricity did go out last night. Luckily, it came on about an hour or so ago, so I'm playing a little catch up here. Let's look at the DIA. Okay. If we look at the same principles in the same time frames for the potential of a bottom formation, the DIA has been the strongest of the three indexes. That's the Spider DIA and the QQQ during the last several months. It got stronger, quicker, made new highs for larger time periods, longer time periods, and managed to break its major bear trend line and stayed above after testing the trend line, and has made new highs like the others for the last 3 weeks and the last couple of days. Nothing surprising there. Now, if I'm right about some sort of a decline here in the next couple of weeks, I'm expecting at least the lows in the DIA to be challenged and to, like the S&P, make modest new lows, but that would still be a fairly higher level than the first shoulder low on the DIA, which is here around 296. And of course, it was on the same date, June 17th. We have a double bottom for the head of the formation. And now we're looking at, again, the end of January, maybe the first week of February, for a low, I think somewhere in the ballpark of 320, 325 maybe, 322. And that's it. So let's see if this comes true. The QQQ is a little bit different. Remember, it's been the weakest of the three indexes in the last year. The last break we had and went sideways for 3 weeks almost made a new low for the whole damn trend on the Qs. So the last vestige of support held. So that scenario I just explained would allow the Qs to actually test the lowest low for the previous year back in October 13th, of course, maybe even make a slightly lower low as well. But some sort of bottom formation, timing wise and price wise, I do think is in the process of developing. I'm trying to be as accurate timing wise and price wise as I can. This is a very tricky time period. This turn, if I'm correct, is going to, I think, cause a bull market for most of 2023. Okay, that's my commentary for stock market indexes. Let's go to futures. We'll start with corn, which has a bullish engulfing today, an outside up day at this point. We did catch the top of the rally last week. Excellent ER automated sell signal. But it looks to me like we're going to have some problems here. Corn could be developing, I hate to say it, a head and shoulder bottom. Look at this. We have a low, and it was a bullish engulfing. Didn't work all that well, but the market turned up a little. Then we have another new low, the lower low, the head of the formation, and it was a bullish engulfing also, ER, automated buy signal. And then the rally high gave us a new sell signal. And now we weren't oversold, but that's not unusual in the last shoulders. Shoulder bottom, head and shoulder bottom, inverted head and shoulder, all the same thing. But the bullish engulfing is a buy signal in its own right without the extras that I use to create my automated trading system, and I think better signals. So last shoulder low today on corn, maybe. Let's see if it starts to rally and break that hypothetical neckline, which would be across the highs of 678-ish, and that would be on November 15th, and the high last week, which was December 30th. And that high for the second pivot point for the neckline, slightly upward slanted, would be 685 and an eighth. Looks like 685 is good enough. All right. Next chart, commodity futures. Cocoa. Well, looked like it was off and running yesterday with a new high close and the trend being up and everything in its favor, which still may be the case, although I was not expecting a big break like this today. So I need to know, I need to see it hold its support, which is just a little bit lower, and then turn up and start to make new highs again. Otherwise, we have something else developing potentially. So that's it for cocoa. Soybean oil. We caught the bottom of the break a few months ago. Nice rally. Now we have a retracement. The trend is a little ambiguous. On a long-term basis, it's really flat, gigantic pennant formation developing over the last several months. And I think this is very neutral so far. Waiting for signals. Next, live cattle. Minor little double top, but the trend is up. Probably not going to be a double top. And I'm looking for new highs in the next few days. Next, platinum. Got a little overbought, so I wouldn't be surprised if it was going to have another minor dip, but the trend is up, friendly to platinum. Next, natural gas. Coming down hard, got very oversold. Now it's not oversold anymore, but has the chance of still bottoming out for a little bit better rally. I don't think that one-day rally yesterday was all there is to it. I think we're going to see a little bit more rally in natural gas, but the trend is down. So I'm basically longer-term bearish. Next, high-grade copper, getting overbought. So I wouldn't run after this, although it looks like a very good bullish breakout. The next time it comes down to approximately 39,500-ish, 39,600, I would be very interested in being a buyer. Or I shouldn't say it quite that way. 3 0.9695, something like that. Next, that would be a buy. Wheat, new lows, trend is down, bearish, looking for probably something in the 17s, maybe even a test of the $7 level, 700 level. Okay, wheat. Next one's live hogs. Another downside breakout. Got a little oversold yesterday. I expect it to rally, but it hasn't really started yet because we're new low and a new low close today by a minor amount. I'm looking for a place to go short. Next, coffee. Slam dunk, but in oversold condition now. So I'm expecting some downside follow through for a day or two, but not a good place to go short at the moment. If it rallies back up again, say to about 155, 80-ish, that could be a very good place. In fact, near today's highs, but it's kind of getting away on the downside. Next, OJ. Head and shoulder top may be building. Inside trading range doesn't do anything for me. Same comment as yesterday, basically. Neutral for the moment, looking to see if a bearish pattern has developed, and then we'd have a pretty good bear move coming, if that's true. It's neutral for the moment, but I can see a bearish pattern developing. I think it hasn't finished yet. Next, soybeans. Neutral, not much to say, waiting for a signal. Next, heating oil. Same kind of thing, neutral, waiting for a sell signal or buy signal. Big sideways trading range for months now. The E-mini, of course, besides being a futures contract, ES, it is, of course, the S&P 500. So same commentary as the spider. No difference really, except minor differences. Next, sugar. Big rally today out of an oversold condition I mentioned yesterday. I don't think this is going to go very far. I would look to buy a minor downside correction. The trend is up. Next, bonds. Big slam dunk today. Interesting. Stock market's not paying much attention to it. We remember we're only at 1.4 higher in the spider, which is basically nothing. That can come and go in a matter of a minute or two. So the move down in bond futures means a little tiny rally in the stock market interest rates on a day-to-day basis. So the market doesn't care. It's waiting for something. Otherwise, it normally would be a little bit bearish, applying a little bit of pressure on the bonds. Anyway, next chart, 10-year notes. Same comment. A little bit lower than yesterday's lows. Came close to being overbought, but wasn't. I still think both bonds and 10-year notes are developing long-term bottoming out formations. I've got to wait some time to see how that develops. Next, gold, bullish, getting a little bit overbought almost. It's right up there, so I wouldn't run after this. I'm looking for downside retracement to 1823 area, 1840, low 40s, and I would consider being a buyer there. The trend has changed to the upside. Next, oh yeah, we did catch the first low with a bullish engulfing in the gold market back on September 28th. Ends up being a double or triple bottom, depending upon what you want to call it. Could be either, but it's the bottom, and it worked. So bullish on gold, looking for a move up to about 1958. Yeah, 1958-ish. Next chart. Silver. Trend is now up. Large sideways bottom trading range scenario. One might make a case for head and shoulder bottom also in this case. Wow, bunch of them lately. And I'm expecting it to make new highs to the move in the next few days, probably within a week. Next, live crude oil, crude light. Trend is down, waiting for a sell signal, coming up slowly for a couple of days after getting close to previous lows. The highs are all lower than each other over time, and the lows are lower than each other over time. And that defines the basic definition of a bear trend. Looking for lower levels. Hope I catch a good sell signal. Next, soybean meal. Trend is up, looking for higher levels. We did have a minor correction a couple of days ago, then a new high yesterday and last Friday. So I think we're ready to make another new high in the next few days. Next, corn. This is where we started. So bullish engulfing today. Could be trying to develop that bottom formation as I detailed. That's it for today. I'm going to skip forex and sectors. Again, I had a power outage this morning, so I'm a little bit behind. Have a great trading day. Talk to you tomorrow. Stay alert. Bye-bye.